Good afternoon. Again, my name is Glennis Waters from GIOA. Thank you so much for joining us today for our session on health savings accounts for operators. So today's session, as you know, we already had the team member session, and we're focused directly on you as high income earners and what you need to think about and do as we look towards your new HSA accounts. This is GIOA's first year having health savings account, and it is linked to that purple plan. So we do have a couple of things that we want to make sure you are reminded of as you begin to use your benefits. So we're going to kick off the top of the call with Joe DeLisi. He is from our vendor partner, Olive Harbor. And many of you may have heard of Olive Harbor or you use Olive Harbor. You may have talked to Joe or Michael Palmer, who I'm sorry, everybody, I'm omitting people through the meeting. So who manages the retirement options for GIOA. And we really wanted them to be here today specifically for you all because you are high income earners. And so that does mean something different when we're talking about health savings accounts. So before we begin what we want to talk about, Joe, do you want to do a quick introduction of yourself?
Yeah, sure. I'll give you the 30-second background. I've been in this business for almost 30 years now. Michael and I are partners. We work with many operators. We also work with a lot of business owners outside. And so what Glenn has said is really true. That high income area is really where we are. And so I think we're probably the right people to be on the call today about HSA specifically because they can get a little confusing.
Perfect. Thank you, Joe. So, okay, everybody, you are in a health savings plan, which means that you are in a high deductible health plan. And for GIOA this year, that is the purple plan. So if you're unaware of that, you are enrolled in the purple plan. And as we're looking at health savings accounts, we want to remember that that high deductible health plan this year, there's a couple of features that you should be aware of. So when you're in that purple plan, you must stay in network. There is no out of network in that particular plan. And your deductible has to be paid before the plan will pay towards your coverages. So that's one of the exchanges for a health savings account. When I talk to operators about this, while we're doing open enrollment and even this month as we were setting up HSA accounts, I like to say you're exchanging a lower premium for the ability to put money away for retirement later. Joe, would you agree with that comment?
Yeah, the only caveat I would say is that yes, it's for retirement, specifically for qualified medical coverages, and we can get into what that all is in retirement, but it's a huge benefit. And to look at it as retirement is the right way. I just wanted to be real clear about the government's look at it.
Exactly. And so the reason why you hear me saying retirement and savings, right? So when we had this training with your team members, the conversation was you want to try to save as much money as you can. But if you run into a pickle or something comes up more expensive, you certainly can use your HSA to pay for those medical, dental, and vision expenses that you have. But you want to try to save as much as possible because this account, it rolls over every year. So it is vastly different from a flexible spending account, as some of you may be familiar with. Those accounts have a use it or lose it provision on it or a limited amount that you can roll over every year. This particular plan is yours, is your account. You keep it, whether you're with GIA or not, and it rolls and it continues to roll. And after $1,000 under our plan, now if you have another HSA, you can look at what that investment is, but you can invest those dollars above that 1,000 mark. And I did send out to everyone prior to this call those investment options under Voya that you can choose from. But as a high income earner, it is more advantageous for you to not touch this account for those normal day-to-day medical plan expenses and try your best to just pay for those out of pocket so you can grow and invest this account in a different way than your team members who are maybe not as high earners. Does that make sense? Does anybody have any questions about that? Or Joe, do you want to elaborate on that?
Yeah, I'll jump in on that. So, I mean, you've nailed it. One of the big mistakes that we see people making in HSAs, generally speaking, is what you described, is that you put the money in, you put $8,700 in this year as a family. Your kid needs braces, and you're like, oh, great, I've got $8,700. I can pull some of that out. you had mentioned the difference in FSA and HSA. FSA would be perfect for the braces or the contacts or the doctor's visits. The HSA is literally the only triple tax advantage program we have in the US. Okay, so and I know Glennis, you're probably going to get to that, but I'll steal it.
Go
And
ahead, Joe. Spill away.
so, when you put that 80, it's actually 8750 you can put away. When you put that in, you can deduct that, right? You're not paying taxes on that income this year. That's deductible. You put it into your HSA, as Glennis mentioned, after $1,000, you can then invest that money any way you see fit. You could be as aggressive with it as you want to. And I would say you probably should be, because all that money that's going to grow and compound, that's going to grow tax deferred. That's the second, right? So tax deductible, tax deferred, not paying anything on the earnings. And as she mentioned, that's going to stick with it, all the way through your age 65 and even beyond. You don't have to start taking it out at 65. And then the third piece is or I'll just say retirement, but past the age of 65, if you choose to use that for qualified medical expenses, it now comes out tax-free. And the list that you can use is pretty exhaustive. I mean, there's a lot of things you can use this for. We can get into that if you want to, Glennis. But what she was saying was really accurate, because you've now got 8,750 bucks a year, and increasing, because the government tends to increase that you'll never pay tax on. Literally, you'll never pay tax on any of that money if you use it for the right expenses in retirement. So it's a phenomenal plan.
Yeah, and just to clarify, if you're single, because I know some of you have a single, it's 4,400 this year. The 8,750 is for the family. So I just wanted to make sure all you all knew that distinguishment. But yes, Joe, thank you very much. That's absolutely right. You do not necessarily want to just tap into this account for your day-to-day expenses. You would need to become an advocate, is what I would like to say, of your own healthcare. So if you don't have the Sydney Health app, which we have Anthem, I would suggest you download that app, because it will tell you where you are in your family deductible. It will tell you where you are in your out-of-pocket maximum. So you can understand how much you're actually paying for your care and investing in the HSA to make sure this is a viable plan for you year over year, which you should see these savings, as Joe mentioned, especially once we get into the investment component on the plan itself. I'm gonna pause. We've talked quite a bit. Are there any questions in the room? You can unmute yourself or just raise your hand. Either way works.
Hey guys, Nolan Hatley here. I'm more so just curious. I'm doing a family because I'm married, but as far as the definition of single, I mean, for folks that are dating or engaged, I mean, is that from a tax standpoint? What's single versus family?
For you mean as far as the HSA contribution?
Yeah, like I've got some friends who are operators that maybe they're engaged or things like that. So as far as being able to do a family versus single,
Yeah, it's actual family, your taxable dependents on your IRS tax.
okay, so it'd be an IRS thing. Okay,
Yeah, yeah.
all
And
right.
if you're not, Nolan, if you're enrolled in a single plan, the system's not going to let you contribute more than
Okay, okay, okay,
100. Yeah,
okay.
absolutely. Now, keep in mind though, with that, Nolan, for anybody over 55 and older, you get that age 1,000 additional
Right.
contribution that you can do on top of that.
I have a question.
Yes.
Uh, Tony Alexander. I was in the HSA program last year. I have money set aside in a Lively account. Um, am I going to keep contributing to the same thing, or do I have to change or move money from that Lively account to whatever GIOA has?
No, if you have an outside HSA, you do not have to use Voya. You can keep your outside HSA, but we will not monitor your contributions to it. We won't send any money to it. It'll be just like you were doing last year. You also would need to encourage you to check your investment options under that plan, because when we're speaking about investments on our side and the $1,000, we're talking about from our plan standpoint. So you just want to make sure you check your investment options on that side. Yes, Derek, I see you. What's your question?
Uh, yeah. At what age? I mean, how long can you contribute? Can you contribute past 65 and 70 years old? I mean, how long is there a cutoff, age cutoff where you can't contribute into the plan anymore?
Um, I need to double check that number. I want to say it's at retirement because those benefits are used for that age. I think it's around age 65, 66. But I'll double check on that for you to make sure I have that correct answer. Because I don't know off the top of my head. Stephanie, do you know off the top of your head that age?
I do not. I will have to get back to you on that. I do apologize.
Yeah. Okay. So we'll circle back around with everyone on that age, but I want to say it's 65 because you're going to start losing some of the tax advantages on it unless you're still working, right? Because it's
Yeah,
for,
what if you plan on working until, let's say, what if you plan on working until 70 or 75?
okay. We'll circle back around with you on that, Derek.
All right, thank you.
You're welcome. Yes,
One,
George.
Yeah. So I'm kind of in the same boat as Tony. I have an HSA that I had with a previous employer through Fidelity,
Hmm.
and then I think all the contributions that we would make if we were doing everything through Voya are all pre-tax. So was just curious, is there so in if I'm actually going to send money to my Fidelity HSA, I think I'm really kind of doing that post-tax. Do I just true that up when I'm filing my tax return at the end of the year? Is there a way to do this pre-tax with Fidelity?
So let me clarify for everyone. Your HSA contributions will be post-tax, and you will have to true those up at the end of the year. We had a training about operators with pre-tax benefits and non-discrimination testing. And because you all are such high earners and the highest enrolled population in this particular plan, we would fail non-discrimination testing. So your contributions would still be post-tax, and then your accountant, your personal accountant, when they file your taxes, they'll have to deal with that outside of the plan at the end of the year. So it is still post-tax.
Perfect. Thank you.
You're welcome, George. Are there any other questions? These are some good questions. I love the conversation.
yeah, Nolan Hatley, one more.
Yeah.
Maybe the gentleman just said it, but I mean, is the best practice, hey, you know, I'm 38, so for whoever it is, hey, keep receipts, keep records, and years down the road, you're just paying yourself back for historical purchases and expenses. So if I'm going to the doctor now, things like that, is that the best practice? And keep receipts, whether it's a big email folder or something like that. Is that the best thing? Because I know obviously you can pay yourself back for any expenses. So is that a best practice or the best practice?
You
Joe,
want
do
me to
you
jump
want to
in
take
on?
that?
Yeah, I'll
Yeah,
jump in
go
on
ahead
that.
and
So
jump in.
there's two thoughts to that. It's a really good and a very common question. What you're referring to is something I've heard referred to as the shoebox strategy. Like you mentioned the email, you keep a bunch of email, keep a bunch of
Right.
receipts, right? Shoebox. You certainly can do that. Personally, I think logistically that could be very complicated. I mean,
Yeah.
you're
Yeah.
38, right? So I have an HSA and I fund it to the max, and I am not doing the shoebox thing because I just know myself.
Sure.
Um, let's shift gears though. Once let's say you're 65 years old and you've got $250,000 or more inside of the HSA, which is completely doable, if you're saving at
Yeah.
least for 15 plus years. So here's what you can use it for. And these are some of the things that people don't think through. For instance, everyone's going to be everyone who's not working anymore will be on Medicare. Maybe it's not 65. Maybe the government pushes that back, but you're able to pay for Medicare premiums with the HSA money. So again, that's tax free. You can pay for long-term care premiums
Right.
with your HSA. You can pay for a litany of things in retirement, medications, all this kind of stuff.
So we're gonna have no problem. Basically, have no problem spending the money.
Nailed it, nailed it. I think
Yeah,
you can have no problem
yeah.
spending that
Like
money instead of
waste too much time shoeboxing, like you said.
Yeah, do
you've got
not do
enough
that,
going
Nolan.
on in the store. Yeah, to
Cool. Yeah.
shoebox it, I think is crazy, but you can.
Cool.
The answer to your question is you can.
And
Cool.
Joe, after what age can they use it for non-medically related expenses?
Well, you could, what is that number? It's not 65, it's younger than that. And there's no penalty. Unlike an IRA where you get penalized, you just pay taxes. So I have to look that up. I don't get that question very often, but I do know that you're not going to pay like a 10% penalty like you would normally do. You're just going to pay taxes on what you withdraw. So I would avoid that if you can.
Yep. And then also keep in mind, everyone, that we are not monitoring your keeping of receipts. That is all at your discretion of how you keep your receipts and your transactions for your HSA. And even when you get ready to use it at retirement, that will be something that you would have to track and file as requested by the government. It's not like they're going to come to you every year and say, give me all your HSA receipts. They don't do that. I've had HSA for several years. I haven't been requested for one receipt. I just know where they are if I need them, if it's something historical. That I have swiped my card for. So the card that you have for our card and most HSA cards, they're not IIA certified, which means it won't decline, right? If you go to the store and swipe it for a prescription or for deodorant, it's going to pay for it regardless. So just make sure that when you do start using the funds in your HSA, that you keep that in mind, that it will just swipe and pay for whatever it is that you are swiping that card for. Okay.
I was going to offer one thing. I've had HSA for about 15 years, on and off through different things. But one of the things to keep in mind too is that you can use it for a lot of other litany of things that you don't think about, like band-aids, or I mean, the HSA list is huge. And even buying stuff off of Amazon. I mean, there are a lot of different things, be it glasses, be it whatever you want, as long as it falls under the medical guidelines of what people say, whether it's Neosporin band-aids, all the different other things. It doesn't have to be doctor's visits. It doesn't have to be prescriptions. That you can blow through it pretty quick, or even if you have just some random surgery, all of a sudden you've now blown through that in a heartbeat. So
That's a really good point, Casey, on the surgery. I meant to mention that earlier. Healthcare is challenging, of course, and it's, probably not going to get any easier. Um, I had a neck surgery a couple of years ago where I thought I was going to just have to pay for the whole thing out of pocket because I knew the surgeon, and I knew who I wanted to do it. He had to replace discs in my neck with titanium, pretty big surgery. And it came out that the surgery, if I paid for cash, it was going to be like $15,000. To your point, Casey, it's a surgery either, at 65 or with the shoebox thing now, $15,000 surgery, maybe I'll keep that receipt, right? So if there's a surgery that you want to have done and for whatever reason your healthcare provider won't do it, and it's a legitimate medical surgery, it's not cosmetic, right? It's something specific that needs to be done medically, you can pay for that years later, even though you had the surgery 10 years prior. So I think it was Casey who brought that up. That's a good point, and it's something that most people don't know or they don't talk about. So yeah.
Yeah. Okay. So when we're also thinking about HSA, it is eligible for your dependents. Under our plan, if you're married, you've got two cards, it will have just your name on it. But that could be used, your spouse can use it, and your legal tax dependents. I'm going to stress that again. Your legal tax dependents can use the funds that you have put aside in your HSA. So just keep that in mind. We're not monitoring that, but you do need to know that just in case you swipe for somebody who's not a legal tax dependent on your account. Okay. Along with the investment options, we did send a link to all of the eligible expenses of HSA. Again, that is just really for your knowledge. You can access that at any time in your accounts, just so you can know, because our general guidance, and you do not have to follow this guidance, I want to be clear, is a recommendation, is that you save as much of this money as possible and not spend it on your medical expenses unless it's absolutely necessary to do so, because you are at a different level where it's more advantageous for you to use the savings and the investment features for this particular account.
Can I ask one question before you move forward?
Mhm. Absolutely.
Wanted you, yeah, you mentioned, you said the app, I think. Are you talking about the Voya app, or was there a different app you were talking about on
For our
monitoring?
plan, yeah, we have a Voya app for our plan. You can also log online to the Voya account, and you will have access to see your deposits, your account balance. You will, once your account reaches $1,000, and Stephanie, correct me anytime I slip up here, you can
Nope, you're
invest.
correct.
The investment features will not show until your account balance reaches $1,000. And then you'll have two ways that you can invest. You can do automatic, where is I believe it's a percent or a dollar amount that you can have automatically drawn on top of the 1,000, or you can determine, it manually yourself. But the investment options I did send out as well that you will be eligible for once that account balance reaches $1,000.
And
Okay.
just one
Thank you.
small correction on that piece. So you will see the investment option available. However, it will be grayed out and will not allow you to move forward unless you have that $1,000 threshold that Glennis just went over. So you will see it. Don't be alarmed. But you might not have the accessibility to move forward and do so.
Sure. Okay. I just want to make sure it was indeed the Voya app, not
Mhm.
another app I needed to get. So, okay.
No, it's
Thank
Voya.
you.
Yeah, for us, it's Voya. But if you have an outside HSA, you would need to check what that is under your individual one.
And most of us were going to have it taken out of our salary or paycheck. But I mean, if we wanted to fully fund it today, we could, right?
Yes, you can. So what
And that'd be advantageous. Since you're going to get a year of extra investments. I mean, kind of, sort of.
Yep, you can definitely fund it yourself directly, either if you have an outside HSA or even with us, if you say, I want to fund it directly, you can fund it directly. I would ask that if you do fund it directly, like I set up a couple operators who said, Glennis, I know I said I want this amount taken out, but can I do a lump so I can start investing? And we adjusted that when we set their deductions up. So just let me know. So I can take so we can close your deduction. So if you fund the whole 8,750 or the whole 4,400 up front, we're not deducting you out of Chick-fil-A payroll.
Okay.
Great question, Nolan. Thank you for that clarification.
Yep, sure.
You mentioned the Sydney app also.
Mm-hmm.
I don't know if the previous question was referring to that, but I have a question regarding you mentioned at the very beginning of the call, if you're single, an amount and then over a certain age add $1,000. Can you repeat that for me?
Yes. So the IRS guidelines are 8,750 for a family and 4,400 for an individual that you can contribute to the health savings account.
Okay.
But once you're over 55, you'll be given the option to do a $1,000 age 55 catch up. And then so you can do an additional $1,000. So that will take you to 9,750 and 54, 4,450, 5,400. Sorry, that was easy math. That you can contribute into the account because you're over age 55.
Okay, so it's not per year over 55, it's just any age over 55.
Yes, it's any age
Okay.
over 55. So then next year when they increase the HSA contribution amount, you still get that extra $1,000.
Thank
Unless
you.
they increase the catch-up contribution, which Joe, I haven't seen them increase that in
They
several
don't
years.
increase.
It's always been 1,000.
Yeah, the catch-ups don't increase as much as the baseline typically, but maybe one day we can hope.
Yeah. Okay. Do we have any last question, Lance. See, can you repeat the answer to the last question? I have Fidelity and I'm planning to contribute directly through Fidelity again. I'm sorry. I need to let you know. No, if you have Fidelity, you do not need to let us know. The only people who need to let us know about direct contributions are those who are in Voya. Okay, if you're not in Voya, you not have to let us know. You can do whatever you do. We do not touch that money at all. You just want to make sure that you are in the purple plan because that's the only qualified plan for HSA. I know we have high deductible plans on our account, but they have first dollar coverage, which means they have copays associated with them, and that disqualifies you from contributing to an HSA because you're doing that copay before you pay your deductible. So kind of keep that in mind. Derek, I see your hand. Is there another?
Yes. Do we have until April 15th to put into the plan for deductions off 2025 tax year?
We did not have an HSA last year, so we don't have a previous tax year filing. So if you would need to check with your previous provider to see what their deadline is.
So different provider. That's not a federal thing. It's a provider thing.
Yeah, normally it's around March 31st, and you can get an extension of a couple weeks, which is probably where their date is coming from. But we didn't have a plan last year, so we don't have that date this year.
I got you.
Yeah.
Thank you.
Mm-hmm.
And then for folks that are with Voya, I mean, Joe and his team at Olive, those are the ones that are investing our money.
Well, no, you're going to invest that money directly. We can give
Okay.
you guidance, and
Okay. All right. So you guys we can call you guys for some guidance.
There you go.
Okay.
Yeah.
Makes sense.
Absolutely. All right, Joe, is there anything else we need to talk about on this half of the call?
Not from my perspective.
Are there any questions from the room for this half of the call? The second half of the call is for Voya specifically, but wanting to make sure we get any questions about health savings accounts answered. I do want to make sure I do caveat one thing before we get off. For everybody in a HSA, if you are covered under a spouse's plan, which I don't think most of you are, and it's a non HSA plan, or if you're on Medicare, or if you're on TRICARE, those disqualify you from contributing to HSA. So those rules were laid out when you enrolled into the plan. So I just want to make sure that you review those to ensure that you have the right information in front of you, because that will be something that will be your responsibility to make sure that you're not contributing and you're enrolled in some other governmental plan that disqualifies your contribution.
I don't know that we could do it this year because we've already set up insurance, but in the years ahead, is it possible to do like me on my own plan and my wife on her own plan and us both contribute to an HSA?
Yes, you certainly could do that, but you still have to adhere to the limits.
Yeah, I don't
I
know that
guess
that
I
would
would
help.
be a single at that point and then she would have a family, or I could have one kid and she could have one kid.
No, it's your household still would have to adhere to that
Okay.
family limit. Yeah,
Okay. So it wouldn't be really advantageous. We'd still only be able to contribute the 8750, right?
correct. And if
Okay.
your insurance plan says the purple plan, you are good to go. So you do not have to worry about it. As long as it says health purple, you're good. Okay. Um, are there any other questions? Nope. All right. So this portion of the call will be specifically for those who have Voya. So if you don't have any Voya, if you're not in Voya, if you're in Fidelity or somewhere else, you can drop away from the call. Joe, thank you so much for joining us today. We appreciate you joining our call. If there are questions for Joe at the end, we will direct those to him and we'll get those back to everyone in an FAQ along with the recording. But we appreciate you joining, Joe, and all of you guys will give you information from Olive Harbor. So if you have questions about investments, then you can direct those directly to Joe and Michael Palmer.
All right. See you guys. Thanks for having me.
Thanks, Joe.
Bye.
Okay, I'm going to give me one moment, everyone. I'm going to pull up this presentation. Just want to go over a few things specific to our GIOA HSA.
Hey, I had a quick question.
Absolutely.
It's actually the same one that Nicholas Fry put in the chat, just about PPO versus HDHP on our
Uh-huh.
cards.
Yes. So if you're in the purple plan, if you see, do you see health purple on your card?
Looks like it just says geared up on the top right.
Okay. Do you mind, Cindy, gathering those two names so we can just double check the enrollment is accurate?
Absolutely. Thank you.
Thank you, Cindy.
Thank you. Appreciate it.
Mhm. Okay. Bear with me, everyone. I'm going to attempt to make sure everything is on the screen. Can you see the full screen? Can everyone see my screen? Did I lose
Yes,
audio?
I think
Okay.
so.
Yes, you're good.
Okay, perfect. Okay. So we do have Stephanie on from Voya. Again, she is one of our main day-to-day contacts. Just to let everybody know, we do send the deductions to Voya. And however, I can see if your card was mailed, I can see your letters, but we will not have access to look at your actual account funds. That is because it's a private checking account for you, and that's we want to make sure that we have that separation. So if there's ever a question about your actual balance or actual expenses, you will have to direct those directly to Voya because we won't be able to see that. We won't have access to it. If you have questions about did you get my deduction, or what day did you send it over to Voya, I can certainly answer all those questions for you because we do get it directly from Chick-fil-A. But anything on account balances, it will have to go directly to Voya. So a couple reminders for everyone. It can take up to 10 days to post your contributions to Voya. We've been running faster than that, but that's just the maximum time that is there. It will depend on when we get the data file from Chick-fil-A. We did reach out to everybody and ask you to set up your actual payroll deductions. I will say with that one, that was a little bit clunky, and we got that directive from Chick-fil-A after enrollment. We did not realize that needed to be done. So we did try to reach out to everybody to get it done. Um, Halfway through that process, they did give us a new code and we did send that out on those instructions. So if you need help getting that set up, let us know. Don't worry about not making your annual contribution. HSAs can be changed at any time. We can change those elections at any time. You can do a lump sum today. You can reduce, change your biweekly contribution amounts. The only thing is, if you reduce your HSA contribution, we cannot reduce lower than what you've already contributed year to date. So that's the only rule on the HSA changings. So with all of that, you should have gotten cards in the mail. I checked this group. The Voya cards were issued around December 9th to everybody on the call. So if you don't have it, please let us know so we can make sure we get that card to you. I know we had to request a few things for people because they thought it was junk. It is an unmarked envelope. So it's for your privacy and safety, but that is your actual HSA card. And again, you don't have to use it, but we do legally have to send you one. So keep that in mind. And on there, it tells you how to log into your My Health account solution through Voya. If you have not done that, you do want to do that to make sure you can log in and access your account. And if you have trouble, then you can reach out and we can make sure you get that information. Okay. Are there any questions on this part? Okay. All right, we ran through this all the way. You can change your HSA election anytime. So we're gonna go past that. We talked about the debit cards. Stephanie, if somebody did not get their debit card or they need another card, let's just say they got two and they need one for like a child in college, how fast do those cards get issued out from the request?
I'm so sorry. I'm not sure if it was my computer that froze or if it was you that froze. I think it was me. It's saying my internet connection's unstable. Do you mind repeating that one more time? I'm so sorry.
Absolutely. For cards that need to be reissued, or if they need an additional card for a dependent, how fast can that be supplied by Voya?
So depending on the time of the year is really key here. So if it's in our general regular January through I'd say around September, it should be around 10 business days that you'd receive that, 7 to 10 business days. When we get towards open enrollment season, it's going to kind of push a little bit further out to 10 to 14.
Okay,
But you can call into the contact center. You can reach out to Glennis, who will reach out to me, and we can absolutely get you an additional card or a replacement if needed.
perfect. Are there any questions about cards? Okay. I don't believe there are any operators
So
impacted. Oh, I'm sorry. Go ahead.
if we haven't, that's okay. So if we haven't seen the card, we actually were in the moving process, so I'll double check our old address. But if we haven't seen them, we can reach out to you and get new ones, I'm assuming, right?
Yes, Kyle, you certainly can.
Okay, thank you.
Mhm. So we do have some rules we have to follow for HSA accounts to be set up. So when you all signed up and you set up through the system, you sign off on a couple of things. There were a couple confirmations that we needed to have. So some of your team members may receive this. I do not believe we had any operators in this point, but just know if your address is ever a PO box, we will have to confirm a physical address for you. That's from the U.S. Patriot Act. That is not from us. That's a government thing. And then if you have team members whose social security numbers and date of birth or names are not matching, those have to be confirmed before the money can be deposited, accessible in the account. So if you do get anything from Voya asking you to respond or reply or upload, please do that because that will eliminate the delay in your money posting to your account. Yes, Mark.
Oh, that worked. I a lot of things in the chat saying that they're cards, which I had mine digitally sent to me to print them off, and I'm in the same group as everyone else in the chat that's saying it says PPO and not purple, but we signed up for the purple.
Okay. So if you're on this call, Mark, I have you under HSA, so we'll pull it and look at it and make sure everything is accurate.
Okay.
Okay, and I actually thank you, Cindy. Cindy just pulled up somebody's ID card. I'm not going to say who, but this plan is a purple plan. It does have a little PPO box at the bottom, but you can ignore that as long as you see you're on the right-hand side of the card. Or the group number. There should be a group number on the top. And then on the right, if you see all percentages, so 30% for OV, 30% for ER, 30% after deductible for RX, specialist, office visit, 30%, co-insurance, 30%, and the dental co-insurance, 20%. That means you're in a high deductible health plan because there are no copays there. So, Nick, we just looked at yours. You're good to go. You are absolutely accurate in there, and we will check anybody's whose name is in the chat. Okay. All right. So there are statements. Your statements, you can get them from logging into your My Health accounts, and you can look at all of your statements. You can also get them emailed, and the emails are at no additional charge. But if you want paper, there's a mailing fee for that. I am personally an app girl. I know everybody isn't, but I like to download my stuff digitally. So, and I don't like to have things emailed to me. But you certainly have 3 options of getting copies of your statements. And again, we mentioned there's an online portal. Some of you I know have already checked to make sure that you can log in. If you haven't checked, please do so as soon as possible and let us know if you cannot access your account. That way we can get you updated and make sure everything is in the system for you. And there's a mobile app as well. I actually downloaded the mobile app for myself because I'm in the purple plan too in HSA, and it's super easy to read. If you need to file a claim, you can upload it here. You can message people here. You can look at your account balance here. It's like a one-stop shop for your HSA. So just, keep that in mind that you can do everything in your app that you can do online, but it's in your cell phone. So it's a lot easier. Okay. Just a reminder, number 1, we're in the Health Purple plan. We talked about this. It is the high deductible health plan. We talked about the annual contributions and the catch up. We talked about all the things that are happening and what you can and cannot do with your HSA. That question that we had about what age can you use the funds for non-medical expenses is right here, 65, that you can use those expenses for. And just keep in mind that if you ever left GIOA, you can take this account with you. This is your account. It does not go anywhere. It is for you. I did send out, along with the investment options to everyone on this particular call, the forms that transfer funds into the account. So if you are with another HSA and you want to put everything under Voya, I sent you the document that you need to fill out in order to have that money transfer into your Voya account. Now that means that money will be blacked out until it gets in there, and I think it's only about a 2-week window, but it will come into the accounts and you have 1 HSA account instead of 2. But you certainly could have 2, you just can't contribute over the IRS limit. So just keep that in mind. All right, we went through all of that. We went through all of that. We went through all of that and that. Okay, so HSA investment information. Stephanie, is there anything they need to know specifically about when their account balances reaches over $1,000?
So there's nothing specific. It all will prompt throughout the portal. So you'll be able to look at the different investment options. I believe the information that Glynis give you is going to give you the more in-depth option to help weigh your decision making before going ahead and making that investment. But you'll be able to do everything right on the portal. You'll be able to see the different investments you have. It will show a very similar screenshot here, kind of a pie graph of that information. and you'll be able to see all that good stuff right there at your fingertips.
So Stephanie, let's say I let my account balance stay at 1,000 and everything over that I invest and is growing, and I need to use some of that for an expense. How does that come back? Can I just swipe the card, or do I have to go through something to pull it back from investments? Can you talk through that a little bit?
Yeah, absolutely. So with your investment screen, you will have the option to manage your investments. Within there, you'll also be able to liquidate any investments that you'd like to in case you want to move your investment somewhere else, or if you do need to use some of those funds for personal expenses. So you'll be able to liquidate your investments and you can have that be HSA cash account, or you can have an actual distribution sent to you, whether that be through direct deposit, or a check sent to you, whichever one you have set up. So it is fairly simple and easy to manage those, whether it's adding or removing them. It's very user friendly. But if you ever run into any issues, we do have our member services team who's available 24/7, 7 days a week, and can walk you through any of the particular instances that you may come across.
And if I need to, let's say I'm having surgery, I need to liquidate some of my investments. Do I have to give you a receipt for that surgery to do that? Or can I just do it and it happens and then I submit my, do my receipts later?
It's just like how the regular HSA works. You don't need to provide any type of documentation prior. It is your money. It's none of our business personally what you're liquidating that for, whether it be for surgery or personal hardship. But just as you said, it is always in your best interest to keep documentation of any expenses you incur in the event of an audit.
Perfect. Thank you, Stephanie.
You're welcome.
All right, so we talked about the age 55 catch up. We talked about over 65. We will get that question answered at what age where you should, that you can contribute to the maximum age, whether it's 66 or 67. So we'll circle back around with you on that one. High level touching on some of the eligible expenses. I know we talked about this a little bit. We talked about everything that's medically related, but also, the over-the-counter things we talked about. I think somebody said Band-Aids. You can do cough medicine, pain relievers, the menstrual care products for ladies. All of those things do qualify along with your orthodontia, your vision, your hearing products, and your dental services. And this is regardless of whether you wait to age 65 to use it or you need to use it now, even though, again, we're recommending that as you're high income earners, that you save as much as possible. But these are your eligible expenses. A full expansive list is in your portal. And I did send this out to everyone as well. All right. Just some more things that we were talking about, the massage therapy, the long-term care, and these things. All right. So Stephanie did touch on the reimbursements. You can go online, you can do paper, you can submit by fax, even though, I don't know many people who do fax submissions anymore, but you certainly can do that. If you need to get reimbursed immediately for an expense, it's quite easy to do that right through the app. All right. This contact information, you should have this. We did send it out. If you have any questions about your card, your portal, or anything like that, you can call over to Voya. Please reach out to me or Cindy or the GIOA 411 team anytime if you have questions about your HSA. If it's something that we cannot see, like your account balance, we will get you right over to Stephanie's team and make sure you're taken care of. That is the end of today's presentation. Immediately, I'm going to stop sharing here and open up for additional questions. Cindy, is there anything in the chat?
Jonathan asked that he said he joined late, and just wanted you to reiterate, will it come out of your salary if you are LLC, or will it come out of the FCR at the end of the month?
So your actual deductions come out of you have to add yourself to the Chick-fil-A payroll system. And they gave us that new code last week is HLTHSAV. Oh, sorry, it's EEHLTHSAVAT. Sorry, it's a very long code. And it will come out of there. For this one benefit, it has to come out of that. Chick-fil-A payroll. Now, if you can't add yourself to Chick-fil-A payroll, you'll have to talk to your Chick-fil-A accountant about making sure you get that done. Stephanie, is there a limit on the funds that can be invested for the HSA?
Nope, the only limits that the IRS has in place is the contribution limits per year. If you did want to invest your entire contribution, you absolutely can do so. as long as we meet that $1,000 threshold at the beginning.
And then, Nolan, I'm sure operators know, but whatever we're putting in our HSA, you guys can pay yourself back up to that $40,000 limit. So, you can reimburse yourself. So if you put $1,000 a month, you can pay yourself back. Chick-fil-A would take care of half of it on the FCR. But of course, it all goes towards your $40,000 a year.
Thank you, Nolan.
And then if I think I asked him a minute ago, but just to make sure, if I wanted to go ahead and fund all of it, let's say this month or next month, do we need to do that in HR payroll, or I could just do that? Okay, so it all needs to get done through payroll.
It needs to be done through payroll.
Okay.
Or you can, if you send it directly to Voya, you just need to tell us so I can take you out off of my list.
Right.
Money. Yes.
Okay. All right.
Yep.
And Glennis and
go ahead,
Stephanie, I'm sorry. One more question. If an individual has a balance in their outside HSA plan, but they signed up to Voya, they asked, do they need to zero out the plan or cancel it? Or he's also asking, is there a form to transfer that amount, or can he just spend it instead?
You can leave it there. You can transfer it to Voya. I did send that out along with the investment options. We can send that out again post call with the recording so you can have that form if you want to combine it into one account, or you can leave it separate and just spend it there. It's still your money. The advantage of combining it is administrative fees. So you're not getting hit twice with admin fees.
And then one last question regarding beneficiaries. If an operator passes away, would the balance in his HSA still be available to his spouse immediately? What happens to those funds?
So
that's a good point.
Sorry,
I
Stephanie,
apologize. So you absolutely do want to go ahead and establish beneficiaries on your Voya HSA. Otherwise, it will go a part of your estate and have to wait to go through that whole process. So please assign beneficiaries to your account.
Perfect. Thank you, Stephanie.
You're welcome. Sorry, I had to jump in there because unfortunately we do see that can happen from time to time, and it's already a hardship that a lot of families will be dealing with. So setting up that beneficiary can really make a large difference.
Yeah. And we will send a note out to remind you to set up that beneficiary as well. Cindy, anything else in the chat?
Just one question about the email. I'll get that to you, Brandon. And then in regards to the cards, I've checked the ones that were listed. They all look great. Don't want to say any more just for privacy reasons. But yeah, if you have specific questions, you can reach out to us directly. But all of those looked great.
Thank you, Cindy. All right. Well, we are about 8 minutes early, so we will hang around for any additional questions. We thank you so much for joining today. We appreciate each and every one of you and all the great conversation we've had. This recording will go out to everyone, so you will get a copy of it, and we will resend to you the transfer form, the investment options, and send you a reminder about the beneficiaries. I hope you guys have a wonderful afternoon, and we will talk to you next time. Bye, everyone.